Welcome to week 2. This is the first lecture, lecture 2A, and what we're going to be doing with this is we're going to be revisiting or look in more detail to the sales tax exemption. As you remember from the first week's worth of lectures, we talked a little bit about state sales tax. It's important that we go over this in a little more detail. Again, the types of buildings that are typically exempt from state sales tax, all government buildings, local, state, and federal, and all not-for-profit organizations, at least ones that have registered with the state, such as the Red Cross, religious organizations, in Michigan, charter schools, etc. And then buildings that have a partial exemption, again, would be manufacturing buildings, classified as industrial. They do not have to pay sales tax on any energy that's directly used in the manufacturing process. So this is a partial exemption. So to review an example, I have a utility bill subtotal of $23,475, a sales tax of $591.57 for a total of $2466.57. The first thing we need to establish is determine the utility bill subtotal if not one was given. So if you're not given this line item, if the utility company doesn't do a subtotal, to get a subtotal, you can simply take the total and subtract the sales tax out. So work backwards to get a subtotal. That's step 1. Step 2. What you need to find out is calculate what the sales tax would be if they were fully taxed. So in Michigan, the sales tax is 6%. So I would take the subtotal, either they give it or I'd have to calculate it, and multiply by 6%, or 0.06. This gives us a potential sales tax of $1,408.50. Now what this is this is what the customer would have paid if they were 100% taxed or 0% exempt. Step 3, compare the full sales tax rate with what the customer actually paid. Well, if they would have been 100% taxed, they would have paid $1,408.50. They only paid $591.57. So this customer has a partial exemption. In Michigan, that means they manufacture something. Or it could mean there's a mistake on the bill, that the state thinks they make something and they're giving an exemption. They're not actually exempt. Anyway, we'll assume that they're manufacturing something and they have a partial exemption. Step 4, determine the amount of tax and the amount of exemption. So if I take what they did pay and over what they would have paid at the full taxable rate, if I divide those two, I get 0.42 or 42%. They paid 42% of the total taxable amount. So 42% is what they're taxed at. The remainder is 58%, so they're 58% exempt. So, in summary, the customer only paid 42% of the total amount that could have been taxed, so they're 58% tax exempt. Now, it should be known, or should comment, that typically a building, if they manufacture something and they're tax exempt, it's usually close to 80%. Manufacturing square footage uses a lot more energy than non-manufacturing area. So most buildings, if they're manufacturing something and they have an exemption rate, it's close to 80, maybe even 90%. So for me, this 58% tax exempt would be cause to look further that maybe the sales tax exemption is too low. Now, why is this? How might they get a wrong number? A lot of manufacturing companies calculate their tax exempt based on the square footage of manufacturing and the square footage of non-manufacturing. It's a simple way of calculating it, but the method is faulty. This is saying that 1 square foot of non-manufacturing area, like a bathroom, uses the same amount of energy as 1 square footage of manufacturing. That's flawed. But the state is never going to call you on that because it skews the exemption in favor of the state. The state's actually collecting more sales tax than if it was calculated correctly. So most sales tax exemptions due to manufacturing are calculated too low because companies don't know how to go and calculate it correctly. Correction example. From the previous example, the current owner is 58% exempt. An evaluation of the building shows that the customer is actually 89% exempt. Calculate how much money this will save the customer. So we've changed the exemption rate from 58% to 89%. That's a 31% change in their exemption rate. So what I really want to know is what's each 1% worth in changing their sales tax exemption? Well, if 100% of their sales tax was equal to $1,408.50, each 1% of that is $14.08. So a 31% change in sales tax would equal 31 times the $14 and some odd cents per 1% change. So that 31% change would equal $436.64 savings on that month's utility bill. I do have a sales tax calculation sample at the end of this lecture notes. And it's important to know one other thing. In Michigan, you can recover 4 years of overpaid sales tax. 4 years. So this would be $436.64 times, if that was a typical month, times 48 months. That's the amount of overpaid sales tax I could potentially go back and recover from Michigan if it truly was a wrong sales tax exemption. Now, the other thing that's important to realize is sales tax exemption corrections should be done by a professional, somebody that's very familiar with state sales tax and understands how to go in and calculate, a building's actual usage. There are companies out there, consultants, that do this, but it can be lucrative and it can be a source of money to help fund other energy conservation measures that you might find later. So let's for a second go out and take a look at this sample bill found at the end of your lecture notes. So this sales tax exemption, if we look at the bill, the first thing we said is we need a subtotal. In other words, a pre-sales tax. Well, here's the total amount paid by the company. Here's the sales tax. And on this particular bill, there is a subtotal, $12,934. The other thing we should look at real quick is we should go up and take a look at what rate they're under. They're an electrical general primary rate. In other words, they own their own transformer. And they're I&D, they're industrial. So the utility company does truly think they make something. Now, we need to go down at the bottom, and here is the basic calculation. Enter the total energy charges. Enter the sales tax. If we subtract 2 from 1, we get the subtotal, which is on the utility bill. Multiply line 3, which is that subtotal, by the sales tax. This is the amount that they should have paid if they were 100% taxed. Now we divide line 2 by line 4. So what did they pay? They only paid $38.80. They should have paid $776. So if we divide $38.80 over $776, we get 0.05 or 5% taxed. That means if they're 5% taxed, they're 95% exempt, which is a significant number. In fact, it almost seems like it might be too high. It could be correct, but that number would be something maybe I'd want to check. This ends the first lecture for week 2, in other words, lecture 2A. When you're ready for it, you can proceed to lecture 2B. Thank you.